Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Tuesday, January 31st, 2023. Before I click on the charts, please click like if you would. If you haven't already, it helps us out a great deal in being found on YouTube. Also, subscribe to the Wicked Stocks YouTube channel. It'll provide you notification each and every time new content has been uploaded. That includes the daily Tesla and daily Apple reports. And if you would, please share the content with friends and colleagues. So I'll start with the big picture and work my way in. We came off of meaningful support about a month and a half ago that is presently in the 89.41 to 101.12 region. That is a channel base. The channel resistance is 258.62, and I've been mentioning that as a possible target, and I still hold to it as a target over the next few months, holding above this 155.98 to 164.09 region. These channel structures that held in October before collapsing in early December, and now we're back above them in large part from the positive earnings that came out late last week. So here we are easing back into this zone of support. And these formations we're watching on a daily basis, and I'll take a look at them. Let's see, I'm going to just zoom in here. There's a lot of things going on here, but the channel area is on the daily chart between 156.70 and 165.10. I'm still using 165.10, and I'm also using this rising 1/3 speed line that is projected off that move low from 3, 4, 5 weeks ago, 161.95. That is the downward pivot point, in my opinion, as we move into later week and even into later February. Until then, your bottom picking zone, 161.95 to 165.10, narrowing daily. So here's the what ifs. If we happen to break 161.95 today, then we should fall to the 155.66 area, which is preceded, of course, by that channel structure at 156.70. And so breaking 161.95, 155.66 is expected intraday. That's a decent day trade for aggressive day traders. If we can bounce out of 155.66 and muster a settlement then above 161.95, we're still in this sort of bottom picking dynamic, as I'm anticipating over the next week or two, 194.58, over the next 3 to 5 weeks, 221.25, and over the next several months, the 259.50 long-term channel top. These are all objectives over different time frames, holding above 161.95. And so the buy signal that was elicited late last week remains in effect above 161.95. Now, I might change these out as the week plays out and in deference to these lower numbers in the mid 150s. But I will say that if we settle today below 161.95, I'm not crazy being long this market. We also have the low of the high from last Friday of 161.17. So I'll just assume that if we settle today below 161.95, it'll also be below 161.17, which I think is a pretty fair sell signal as we move through the rest of the week and into next. I'm going to say over the next 2 weeks. I don't see it by the end of this week. By the end of next week, though, 131.91, which is a rising 2/3 speed line. So with speed line analysis, which I use a lot in my analysis, whether it's in the commodity markets or in the stock markets, if you close below the rising 1/3 speed line at 161.95, the rising 2/3 speed line becomes your next objective. And you can use these on multi-month charts or multi-day charts, which is the case here. This is about a month in play. Closing below 161.95, if you're long Tesla and if your time horizon is a week or two out, my suggestion would be to liquidate that long position. And if you can, play the short side, perhaps buying, 135 out of the money puts that don't expire for at least, I'd go 3 or 4 weeks out. It'll only take a week or two to reach this area, but you want to preserve your delta on the way down and be less susceptible to time decay. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. So holding above 161.95 to 165.10. This remains a bottom picking opportunity for Tesla. Anticipating, well, you can see it right here. This 221.25 remains a 2 to 3, 3 to 5 week target. With present volatility, certainly 2 to 3 weeks is possible. But as I was mentioning in yesterday's report, we do have a new long-term descending 1/3 speed line that is based in part on that move low from early January against the all-time high from, what was it, November of 21. So it is trend defining in its own right, and it can contain weekly buying pressures. So working our way up from here, assuming we hold above 161.95 to 165.10, I still have 172.94 as a meaningful intraday resistance. And if we push through it, this 179.83 level in reach again today. We have topped out there really 2 days in a row at 179.83. I'm going to keep it as a session containment level. It can contain daily buying pressures, and it is in reach again today, holding above 165.10. 179.83, able to contain daily buying pressures, and when we close above 179.83, we are probably just 3 to 5 days away then from reaching that long-term speed line that once again is at 194.58, possibly within 1 to 2 days. 194.58, able to contain weekly buying pressures. And we could fall off from here again, back into the low 160s within a week or two of doing so. Closing above 194.58 indicates 221.25, probably by the end of next week with this kind of volatility. This classic long-term 3/8 Fibonacci AB, able to contain weekly buying pressures when tested, possibly into later February. That's why I give the 259.50 target, our 2 to 3 month target, that much time, because we can top out at 194.58 for a full week and back off. We can top out at 221.25 for a full week, possibly a month, before backing off. And then assuming then we actually settle above these areas, which would set off secondary buying into the following week, 2 or 3. And of course, if we close above 221.25, we're probably 2 to 3 weeks away from reaching 259.5, which is a long-term channel top. It is an objective right now above the low 160s. Do I have that shown again here? No, not here. Let's see. Here it is. Yes. So holding above these channel structures, which are pretty classic channel support now, and that is also in combination, as I showed you earlier, with these speed lines coming up at 161.95. This is our area to buy into for the week and even into through February trade, and above which anticipating higher trade over that time frame. And inversely, breaking 161.95, expect 155.66 intraday, and if we close today below 161.95, I would expect the low 130s within a week or two, or wherever the speed line is at that time. And last thing I will say, that not unless we close below the 131.91 rising 2/3 speed line would I expect a revisit of that longer term channel support that we see here on this within another 2 or 3 weeks of doing so, where we can bottom out on a monthly, possibly quarterly basis. I hope that all made sense. I threw a lot of different time frames at you, but the bottom line is we are in a bottom picking dynamic through February above the low to mid 160s, anticipating 194.58 over the next couple of weeks, the 220s over the next 3 to 5 weeks, and the 240s, 250s over the next 2 to 3 months. Inversely, if we close below 161.95, a good high for the week and probably into later February, as I would anticipate the low 130s within a week or two of doing so. And that is all I've got for Tuesday's Daily Tesla Report. Please click like and subscribe. I'll be back tomorrow with Wednesdays, and you have a great day.